welcome again. And all I can say is that financial year 2023 is one of those years where I could say we are proud of many, many things. One more year of double digit growth, one year where we brought in our focus towards large deals and we closed $3 billion worth of large deals. More important is, many of you had questions regarding the performance of CME, 12 quarters of straight quarter-on-quarter growth in CME. And I'm also glad that Manish could join us today because, Manish being based in Dallas misses out this direct questioning. But at the end of 12 quarters of quarter-on-quarter growth, welcome Manish. I did share with you last time that our network services business, so many of you would remember, we had acquired LCC and we had a little bit of a challenge trying to work through multiple countries in which network services was operating. We chose to consolidate, but now in a new avatar where 5G has played a big role, where network services have played a big role, and network services standalone only as network services as a horizontal is about $1 billion per year. And if I were to talk only 5G, that means 5G as for enterprise, 5G for telcos, even that has become $1 billion business. So again, very, very happy that our focus on customers, our focus on employees, our focus on technology bets. Most of you would recall that we were the early investors in metaverse, blockchain, Web 3.0, and customer experience management. We have successfully delivered a great quarter. Now, I call it a great quarter is not because the results are anything spectacular. I call it a great quarter is because we have continued to invest. We have continued to focus the organization on development of new skills, upskilling, and being ready for the market. I mean, we all know in today's market, the AI adoption is no longer linear. It has become exponential. I think our company has continued to invest, partner with some of the majority players, both in OpenAI as well as with Google or as well as with other, automation players. And the second part is that we have continued to focus on future of technology. Maybe some of you will get an opportunity to talk to our Chief Innovation Officer and also be able to see some of the work that we are doing as you step out on quantum computing. You will see a bit of a work that we are doing on data and analytics. You will see a lot of work that we are doing on cloud technologies. So there is just an opportunity for us. We are right now in Pune, and as you would step out, you will see Tech Mahindra's focus on connected solutions, Tech Mahindra's focus on the investments in technology, and please do spend some time with us. I'm also particularly proud of the work that Tech Mahindra has done for winning awards in sustainability, for being ranked number 1 in the S&P Global Sustainability Index yearbook for 2023. I'm very, very happy that, I'm sure Harsh can talk a little more, but we have also been rated one of the highest in the Bloomberg Gender Equality Index for the 4th consecutive year. So in general, Your company is making all-round progress on the people front, on the gender equality, on the sustainability, on the tech index, and also focusing on continuously diversifying across the geographies. Regarding the economic outlook, I know that most of you have questions about where the industry is going. Most of you also have questions on the layoffs in the tech sector. Most of you have also asked me independently questions regarding how the technology spend, will get impacted when there are certain amount of headwinds. I think as a company, I have always believed, and my management team has also believed, that never waste a crisis. When I say never waste a crisis, I want all of us know that the geopolitical scenario, the war, and some of the changing equations around the world have created a little difficult situation. Now, within that difficulty, why I consider that there is an opportunity. When you go around the world, you do realize that mineral rich, energy rich, or consumption led economies will do well and are doing well. We obviously repurposing ourselves and making sure that we are well represented in all of these energy rich, oil rich, commodity rich areas. Secondly, I believe that the resurgence of IT services will happen very soon. Now, it could be soon, could be 2 quarters away. And that resurgence of IT services means that we as a company, our investments to be ready for that resurgence will help us. And hence, we will continue to invest. And I can only tell you that the previous economic downturns have taught us that it is a good opportunity for us to acquire talent. It is a good opportunity for us to reinforce and relook at some of our processes, and also relook at prioritization of our digital offerings. So I can only repeat, your company is working with alliances, your company is working with our clients, and we continue, and I'll let Manish speak on the 3 themes that he's pursuing, or rather the company is pursuing, on modernization, simplify, and so I'll let him speak, but ultimately we are helping our customers grow. As a matter of confidence and as a matter of capital allocation policy, Tech Mahindra will be giving a final dividend of 32 rupees 32 per share, which translates into rupees 50 as total dividend for the year. So it is a matter of confidence that our capital allocation policy, which means that if I have any cash reserves that I do not need, I'll return it to the shareholder. And hence we are now declaring, my board has authorized me to give 50 rupees as a dividend, total dividend per share. In terms of performance, I know Rohit will cover it in detail, but our revenue is almost the same as last quarter, which is 1668 million. CME has grown 0.7%. Enterprise vertical, for us, healthcare took a little bit of a dip. Overall, we have seen Europe taking a little bit of a dip. So, enterprise vertical has seen a decrease of 0.5%. Our investments for future meant that my EBIT numbers have fallen down, but all I can tell you is on a full year basis, your company is now a $6.6 billion company, a growth of double digit, 10% over previous year, 13.7% on constant currency basis, and that's what gives me the confidence that our investment for future, our focus on becoming more resilient will help us being ready. Uh, on a yearly basis, CME has grown by 9%, enterprise has grown by 11%. EBIT margin, I know there is a bit of a pressure, but at the same time, it also meant we have invested, and EBIT is at 11.4%. So again, a quarter with about 600 million of large deals, a quarter where my pipeline is robust, a quarter where our repurposing some of the country focus is helping, and I strongly believe that yes, there could be a little bit of a headwind, but it will only last for a few quarters, and your company is ready, the leadership is ready also for the year of transition of the CEO. And we do believe that Tech Mahindra is addressing many of the demand drivers and are focused on leadership development and leadership transition. So again, thank you all for coming to Pune. Thank you so much. And I'm going to now request Rohit to take us through the numbers in a little more detail.
Thanks, CP. I think you articulated a lot of financials also, so I will just focus mainly on margins. So if you look at the margins for the year, we ended at an EBIT margin of 11.4%, which was a drop year on year, and the drop was predominantly driven through the wage inflation that we saw, which was from the supply side aggravated to the year, and then some normalization impact on post-COVID travel and SG&A coming back. Those were the main reasons from a margin perspective. And then we articulated that we'll be working a lot on price increases. So the team through the year has been able to get close to 1% of price expansion, as well as work on subcon reduction, which is what we articulated. Between those and other productivity action, we offsetted some of the headwind, but given the impact overall of headwinds, outweighed the actions from a productivity standpoint, hence overall reduction in the margin. As we look at dividend, CP already mentioned, we've announced an 11% increase in dividend versus last year. We were at 45 rupees. We've announced 50 rupees this time. And as per the policy, since we didn't have any major acquisition, we've returned that cash which we generated through the operations back to the shareholders. Through the year, we generated a cash close to $500 million, which was 84% of conversion of PAT. That's what we focused on returning in terms of dividend. Besides that, from a key other aspects, which probably I can add to what CP mentioned, is our business process business has grown more than 20%. Our high-tech business has grown more than 20%. So they've delivered significant growth in the year. Communications, already CP mentioned, on a constant currency basis is upwards of 13.5%. As we look at the large deals has been close to $3 billion. And we continue to grow across geographies. When you look at the geographical growth, we've articulated at the beginning of the year that we will grow more in US and Europe. If you see US, America's growth is more than 15%. Europe growth is more than 13.5%, and the rest of the world growth is around 11%. So we continue to drive that geography mix on a long-term basis that we had articulated, and we will continue to push in the same direction. So those are some of the financial highlights. We're happy to take more questions as we move forward.
We can also address on synergies. Yeah.
So just on our acquisition strategy, in line with our stated policy, we've continued to focus on synergy from our acquisitions in the couple of years back. Focused on is driving about 20% revenues of our acquired businesses in the form of synergy. And the synergy is a 360-degree synergy where we are able to cross-sell clients of acquired companies and vice versa. We are also very focused on integrating back office systems, processes, as well as the service offering portfolio to derive maximum benefit from our acquisitions.
Manish, if you can have address.
Sure. I think all I would like to add in addition to this very nice commentary is, as a company, we have always been very focused on one thing that drives everybody with the company, and that is customer centricity. It's about looking at each of our relationships, each of our accounts, and looking at their problems and solving those problems. This year has been fantastic in that regard because we have found one very interesting word that we have used more and more through the year, and that was simplicity. That was essentially simplifying three things for our customers. Simplifying their operations, right? Not complicating it. Simplifying, of course, by using tech, using people, using process correction, using AI. Finding better synergies for them in rest of their operation. Two is simplify the modernization journey for them. Every single customer, doesn't matter which sector that we talk to, is all very focused on using digital to modernize their infrastructure, modernize their application landscape, modernize their business processes, modernize their overall products and services. So we have taken all the efforts to try and continue to invest together with all the synergy aspects that Vivek spoke about in driving a very strong program on modernization. And the third, but definitely not the least important, is around monetizing. Not monetization just for us, but monetization for our customers. So our account management strategy that is evolving is around A, simplifying our engagement with each of them, and B, is really about solving these three very profound, very important problems for each of our customers. All the large deals that CP and Rohit spoke about, all the growth that we have seen this year, I'm happy to say that everything across all our industry sectors is built around this very simple concept.
Thank you, Manish. If I can also request Harsh, as CP said, if you could talk a little bit about our attrition.
No, thank you. And I think we're very proud to say that our attrition is the lowest amongst our peer set. We are down on a 12-monthly basis to 14.8% and a quarterly annualized basis to 10.6%. CP did mention about how proud we are to be included fourth time in a row for the Bloomberg Gender Equality Index. But we are also now again voted as one of the best places for women to work. And I think all of this makes us really a preferred employer of choice, which is really the credo for Tech Mahindra. Thank you.
Thank you, leaders. We will now open the conference for a short Q&A session. We will alternately take questions from the media on ground and those who have joined us virtually. Media friends who have joined us virtually can post their questions in the chat box. The first question that I'm seeing, businesses are witnessing a lot of headwinds globally. What is TechM's go-to market in the new fiscal?
So I think it's a fair assumption, but I think I've shared with you in the past that number one is that instead of trying to say what is happening globally, I mean, I'm looking at not just the macro trends, but also looking at analyzing every country, every vertical and a sub-vertical. So for example, if I look at my last quarter's performance, my biggest revenue loss on a quarter-on-quarter basis came from the retail sector. Europe, which was looking a little gloomy, actually showed a positive quarter-on-quarter growth. So my point is very simple, is that instead of generalizing it, we go through every vertical. So it's not only manufacturing. I'll go into a sub-vertical called aerospace also. Like, for example, aerospace is now on an upswing. So I would like to believe that our strategy for being more analytical, helping data to take our decisions. Number two, investing for the future of technology. And number three, opening up the tier 2 centers and focusing on people, I think has worked well. And most importantly is we are getting better aligned to our clients to expect their needs and to align with their prioritization, because they also are ultimately serving an end customer somewhere. So for example, when I said travel has come back, I mean, I need to align to their increased needs of being able to service, because they don't want to lose a customer. They want to be able to work at a much better efficiency. So yes, there are days when the skies are dark, but I promise you there is always a sun after that.
Thank you, CP. Any question from the audience here? You can just raise your hand. Can you give him the mic, please?
How do you see demand for 5G from local or domestic telecom companies?
No, I think the demand for 5G, we spoke earlier about, this year has been the year of breaking some records for us. On 3rd of March, we announced that this year we are hitting a 1 billion run rate as far as our 5G business is concerned across the world. And we have also been doing a lot of work in India with the major operators here. We are very clear. We have been probably one of the few companies that have been extremely clear and concise about what our 5G strategy is. It's been for years now. We continue to evolve that strategy, continue to execute on that strategy. Not only do we know what we will do with 5G, we also know what we will not do with 5G. For example, we do not do 5G deployment of radios on the field. That's not a business that we are in. We work on software side of 5G. We work on platform side of 5G, system side of 5G. All of that we continue to support everywhere. I think there is not a single country where 5G rollouts are happening or 5G integration is happening that we are not busy with right now.
Thank you, Manish, and thank you, Shashank, for your question. Next question is from Veena Mani. She writes, what's your forecast on fresher addition this year? To what extent have you been able to rationalize the pyramid?
Okay. So in terms of pyramid rationalization, that's a constant strategy. We've articulated it earlier also. I think last year we had a significant intake, more than 10,000. This year we were focusing more of integrating them to the organization, creating a process through which the productivity gets better, and hence the intake this year was relatively lower. But next year we're going to again accelerate it as a program to make sure that our continued journey on pyramid rationalization continues. And I think we have a clear path defined for us, which will emulate what we did a year back.
Thank you. Any other questions from the audience here?
What exactly repurposing means?
So, couple of 3-4 levels of repurposing. When you do the data analytics, you will realize that retail is softening. BFSI again is looking at becoming a lot more omni-channel. So my point was very simple, that if I look at the data flow, then it also tells me what does the CEO of that sector would need to leverage technology. So that is the first part. Second, for us, repurposing also means is employee skills. I mean, we have seen, I mean, so like there are certain trends in the market. The trends in the market are more about reducing the customer churn. Trends in the market is measuring and improving your customer satisfaction. Number third, the role of predictive AI has become a lot more important. That effectively means is the people that I can repurpose to address some of these data automation or new technologies, then I'm being able to be more agile and more data driven internally. The third part of repurposing is more about realizing that different companies react to slowdowns. For us, it is more about reassessing our management and being able to come up with a new strategy. So, people who were with us on 3rd of March would remember we had said that the company would focus on number one, co-creation with customers. Now, that to me is repurposing. Number two, we had said is that we will work a lot more closely with Mahindra Group. And the reason we wanted to work more closely because it's such a diversified group, and if on certain engineering or certain customer experience management, whether it is into the number of holiday homes, which means hotel industry, or when you look at sustainability initiatives, or when you look at some of the data sciences in terms of I think working closely with Mahindra Group is clearly a signal to say that there will be focus groups based for that. The third area which we spoke about is that within Tech Mahindra, we do have certain IPs and products. We would be looking at how to monetize them better for the customer, because the customer may like that they want to, in current environment, they want to go asset light. They don't want to upfront invest in a on-perm. So I know repurpose is a long word, but I'm just trying to reassure you, it is about repurposing for customer, repurposing for people, repurposing for geography, and repurposing for technology.
Thank you. The next question is from Ayushi. You've already touched a bit about this, but can you further expand on the nature of headwinds that TechM and the IT sector are going to see in the next few quarters?
All of us read the same newspapers, and all of us read and we definitely read or watch your video channels or TV news. I think the headwinds are very simple. It doesn't matter which segment the customer belongs to. When their country's economic growth slows down, I mean, we all celebrated China at 4 to 5% last quarter growth. Why? Because if China starts consuming somewhere, the Australian mineral industry will benefit. I mean, I'm just trying to give you how connected we are. Germany will celebrate because their auto sector will benefit. So my point is it's an interconnected world. And in that interconnected world, the headwinds are when there is a slowdown, and hence consumer does not spend money. And the reality is, many of us sitting here don't realize every time there is an interest rate hike, I actually don't sleep very well that night. Not because I am a net borrower, I don't borrow anything. But my customers have borrowed and their cost of servicing, their debt goes up. If their debt goes up, I mean, they are going to squeeze somewhere. So, I mean, it's too interconnected. It's very difficult to define only one headwind.
Thank you, CP. Any last question from the audience? Okay, I have one from the virtual media. This is from Shivani for the CFO. What is the room for improvement for margins going ahead? Also, why the advantage of supply side easing out is not showing in margins?
No, let me clarify. It is showing in the margin. So if you look at the gross margin, which is where the direct cost sits, you will see an improvement on a reported basis. But at the same time, there's a 60 basis point headwind on FX. If you normalize that, the improvement is much more. What you see in the reported number got offsetted by the SG&A increase with some of the BPS team coming back to office and also some year-end accruals and normalization, which will get, as we move into the next quarter, will drop down. So I think from a gross margin, direct cost standpoint, you see a substantial reduction. You'll see subcontracting costs come down dramatically, which is all the efforts we had articulated earlier, and it's an indication of the supply side also. So we see that impact. It's just that it's not reflected in the headline numbers because of the headwind of the FX.
Thank you. And thank you everyone for joining us. We'll now be concluding the conference. I know there are some unanswered questions for the people on call, but request you to please reach out to me or the team in case you have further queries. The recording of this conference will also